What's up, guys? It's been a long one, and you guys have just been spamming my DMs with questions. Collins, what is going on? You haven't uploaded in like months. Yes. You know, when I'm always away, it means I have something big coming up. So I've been very busy trying to close some deals here and there. I'll have you updated on that later. So in today's lesson, I'm teaching you about candlesticks, right? Candlesticks serve as the bedrock for price action. It's just the foundation of almost everything technical analysis, right? And so before we do anything detailed, it is important that we understand what candlesticks are in the market. And today we are doing just that. If you are new, you're welcome. Stay through to the very end. I promise you this is going to be value and worth your time. If you are a returning subscriber, of course you know what is coming. Smash the like button to help with the algorithm, and let's begin. So guys, what is a candlestick? Well, a candlestick is essentially a technical tool, okay, for forex analysis, and it's of course the foundation of price action trading, right? Technical analysis serves as the bedrock of price action. So what does it do? It reveals the time it took for a market to open and close, okay, and also various key levels of price movement during that period. I know that sounded like rocket science. Do not worry, I'm going to explain very soon, and it's going to make sense very soon. But first, let's look at what exactly a candlestick looks like. So here you have it, guys. That is what it looks like. For a default view, you're going to see a green and a red candlestick. Now, essentially, or to a greater extent, if I should say, the colors don't really count, okay? But for we newbies, let's just stick to this rule, which is quite comprehensible, that the green candles reveal bullish momentum, the red candles reveal bearish movement, right? So what is that, Collins? What is bullish? What is bearish? What bearish simply means is that price closed lower than its open price, okay? What bullish simply is telling us is that price closed above its open price. So here you have it. You have what we call the wicks, which are these long extensions of the candles. We have the upper wick and the lower wicks. Some people call it shadows. To a greater extent, the names don't really matter. Don't go argue out these names, guys. Don't do that. So we have the wicks of the candles. Then we have the high. That is the highest point price got to, and we have the low of the candlestick, right, which is the lowest point price got to, right? Then we have the open price, which is the point at which the market open price opened at. Then we have the close price, and we earlier said that for bullish candlesticks, the open price is higher. The close price is higher than the open price, right? And for bearish candles, the close price is lower than the open price. So here is a scenario. What it essentially means, let's think of this candlestick as what are we going to use today? Let's think of it as the price of a lemon, okay? Let's think of the candlestick as the price of a lemon. So essentially, let's pretend our open price, okay, for the lemon, or in other words, the price which we set out to sell the lemon, okay, is say $1. Okay, it's just $1 for the lemon, for one lemon. So that is our open price, and probably in the course of the day, demand begins to increase for it. So we think it is wise to increase the price of the lemon and make more profit. So we increase the price of our lemon from $1 to $2, right? So we have moved the open price higher, and let's say by the end of the day, we closed down at a price of $2 per lemon, right? So essentially our close price is higher than the open price, and it was a bullish day, right? So take it as a bullish lemon, right? A bullish candlestick. That is what it essentially means. So let's say we go on day 2, and then we decide to open a lemon shop, selling one lemon for $2, right? But people come around and they say it's expensive. They don't buy, they leave, and the day is going on and we are not really making significant profits, right? So we want to reduce our price of the lemon so we can be able to sell something. So maybe at the end of the day we are able to close down selling one lemon for $1 and making a few profits here and there. That essentially means that our close price is lower than the open price. That is a bearish movement, a downward movement, right? You hear a lot of times bullish should hear bearish, should hear up, low. There are just so many terms for these things. Do not argue out the term. The understanding is what we need. Great. So that is essentially what a candlestick is and what it looks like. Like I said again, the colors don't really matter. You might go to someone's page and you see blue, black candles, you see green, yellow candles. These days our platforms have made it easy for us to tweak the colors a bit to our liking, right? So to a greater extent, they don't really matter as much these days. Yeah. So what is the relevance of a candlestick? I think I've said so much already, but let's go through one more. So it's a more detailed view of price action as compared to line patterns. Okay, so here is an illustration of a line pattern. So over here you can just see lines being drawn, right? And this is how a candlestick chart also looks like, or this is how a candlestick movement looks like. So you can see it is a more detailed view of everything. It gives us the high, the lows, the open, the close, and tells us a whole lot more story than just we seeing a bunch of lines on our platform, right? So it gives us a more detailed view of price movement, of price action. Okay, so it also, of course, essentially helps the trader to make better decisions in the market. When you're having a better eye view of everything, you tend to make more careful and thoughtful decisions, right? Which of course in the long run would make you a more profitable trader. And so I personally recommend for beginner traders to always begin using candlesticks, right? Candlestick charts for the analysis. Maybe when you begin to advance a bit, then you can begin considering the lines. But even for me, a professional trader, I still don't use the line patterns anyway. So it's just what it is. Stick to candlesticks and you're good to go. And of course, it serves as the foundation for all price action. We have a single candlesticks, then we have variations of candlesticks, then we have a cluster of candlesticks come together to give us our chart patterns, then we have more clusters of the candlesticks come together to show us relevant key points and all of that. And so candlesticks serve as the bedrock for literally everything technical analysis, right? So they're just so irrefutable when it comes to trading, right? You just cannot do away with them. So that is it, guys. Quick recap. So we said a candlestick shows us the time it took for the market to open and close. They reveal the highest and lowest points price tested during that period, showing us the high, close, the open and low. I explained that using the lemon example, and of course they are the foundation to all price action principles. So they are just so important. If this video confused you a little bit, trust me, you just have to watch one more time and you'll be good to go. Thank you so much for watching. Please don't forget to smash the like button for me. It genuinely supports my channel, and I'll catch you in the next lesson. As always, trade green and peace out.